Hi, I'm Holly and you're watching 𝐊𝐶 TV live from Sydney. This is the Mid-Market Pulse. Let's get started with the mid-market commentary for today and see how the ASX 200 traded by lunchtime. The Australian shares hit record highs on Friday as sentiments remain upbeat after robust US economic data and President Joe Biden's federal spending plans fueled a rally on Wall Street in an overnight trade. The benchmark S&P ASX 200 hit a high record of 7,183.40 in the late morning deals on Friday, breaching the previous high touched in intraday trades on May 11th. In the afternoon, S&P ASX 200 index is trading at 7,174.80, up by 79.90 points or 1.13%. It has gained 2.06 in the last 5 sessions and is currently 0.12% of its 52-week high. The market witnesses broad-based buying as 9 of 11 sectors are higher, along with the benchmark index. Materials is the best performing sector, rising at 2.24% today over the past 5 days. Utilities and information technology sectors trade in red as investors resorted to profit booking post the recent rally. Australian mining stocks rose 2.5% owing to a rebound in iron ore prices. Index heavyweights Rio Tinto and BHP Group are trading higher by 3% each. The energy sector also saw a surge in buying, rising nearly 2% as oil prices climbed 1% overnight on US economic data, offsetting worries of the potential for a rise in Iranian supplies. Whitehaven coal trades higher by 4.5%, followed by oil search, which is up 2.75%. In the financial space, Westpac Banking Corp is leading the gains on the sub-index. And moving on to the gainers and losers, poultry producer 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Limited is the top gainer on the ASX, trading 8.3% higher at 3.40 Australian. South32 Limited, Minerals Resources Limited, IGO Limited and Whitehaven Coal Limited are among the other notable gainers. Now, some of the worst performing stocks on the ASX are CSR Limited, Nuix Limited, Nearmap Limited, Fisher and Paykel Healthcare Corporation Limited, and Mirvac Group. And now moving on to the shares in the news. The share price of poultry producer 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Limited gained as much as 10% to 3.46 Australian after the company raised guidance for FY21. The company now sees statutory EBITDA for FY21 in a range of 438 million to 448 million. It has also upgraded FY21 statutory NPAT to a range of 80 million to 87 million. The company's stated improved outlook was aided by improvements in general trading conditions, with a decline in the impact of COVID-19 restrictions over the last 6 months. Shares of the Australian betting firm Tabcorp Holdings Limited gained 3.65% to 5.245 after it received a proposal from BetMakers Technology Group Limited. BET, an Australian wagering platform operator, offered 4 billion Australian dollars for THA's wagering and media business. Following the announcement, Bet shares are down 13.438% at 1.365 Australian. Link Administration Holdings Limited shares are up by 3.75% at 5.38 Australian after the company stated it has gotten over $3 billion in an offer from a private equity giant 𝐾𝐨 for the majority-owned online real estate platform PEXA. As per the ASX release, property classifieds operator Domain Holdings Australia also eyes a stake in the prized firm and will join a consortium looking to acquire a 10% stake in PEXA. And Downer EDI Limited has announced that the Keelos Downer joint venture has awarded a contract valued at $900 million over 8 years to operate and maintain bus services on Sydney's northern beaches. The contract will see the introduction of 125 electric buses over the next 8 years, and Coles Downer will also introduce innovative headway technology. Following the announcement, the share price of the stock Downer EDI Limited is trading 0.7% higher at 5.63 Australian. Well, before I share more news on the ASX listed stocks, it's time for a short break. At 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. Hi, welcome back. I'm Holly and you're watching 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV live from Sydney. This is the mid-market pulse. Little Green Pharma Limited shared that it has received $2.5 million purchase order from Demecan for around 20 to 21,300 units of its medicinal cannabis flower medicine. The purchase order is for the delivery during the quarter ending 31st of December 2021, and it follows a steady growth in the volume of quarterly Demecan purchase orders. Shares in Little Green Pharma are down 2.9% at 0.675 Australian. And 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Limited has announced that it has struck an agreement to acquire all of the shares of registered training organisation Eureka 4WD. The acquisition has taken place for a consideration of $4.5 million and is likely to be complete on the 1st of July. The last traded price of the stock 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Limited was 0.550 per share. Financial research firm Jefferies has cut the earnings estimate and price target on the fruit and vegetable marketer Costa Group Holdings and has rated the company's stock as hold. The brokerage expects Costa's H1 results to be only marginally ahead of the previous comparable period. It has cut the price target for CGC stock to 3.60 from 4.20 and has downgraded the FY21 earnings per share an estimate by 32% to 13.30 cents per share. Costa Group Holdings Limited stock is trading 0.3% higher at 3.38 Australian. Shares of BetMakers Technology Group on Friday announced that it has submitted a proposal to acquire Tabcorp Holdings' assets. The technology firm has put forward a non-binding indicative proposal to acquire Tabcorp's wagering and media business for an enterprise value of $4 billion. Following the announcement, BetMakers Technology Group Limited shares are down 9%, while Tabcorp Holdings Limited stock rose nearly 2%. And moving on to the Asian markets trading higher. The Asian stock markets are trading mostly higher on Friday, tracking firm cues from Wall Street. Japan's Nikkei 225 is the best performer in the region's major markets, surging 1.9%, followed by New Zealand's benchmark S&P NZX 50, which is up 0.8%. Taiwan's Taiwan Weighted Index gains 0.8%, and South Korea's Kospi rises by 0.4%. The Straits Times Index in Singapore is up by 0.7%, while China's Shanghai Composite was trading flat with a negative bias. In the overnight trade, all three major U.S. indices ended in green, driven by financial and communications services shares. By the close, the Dow Jones rose 0.41% to 34,000 approximately, while the S&P 500 gained 0.12% to 4,200.88. Nasdaq Composite was mildly lower by 0.01% to 13,736.28. Well, before I share the next trending market news, it's time for another short break. At 𝐊𝐶𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐶𝐞 TV. Hello and welcome back. I'm Holly and you're watching 𝐊𝐶𝐞 TV live from Sydney. This is the mid-market pulse. Moving on, Australian dollar bond yields rise. The Australian dollar, which is a commodity price-sensitive currency, is trading higher by 0.10% at 0.7747 cents against its US counterpart. The Australian dollar was last trading at 0.7743 on Thursday. The domestic currency has been moving in a tight range for the last few days. The yield curve flattened further on Wednesday as investors bought the long end of the curve on the view that the price pressure would stable for the rest of the year. The benchmark Australian 10-year bond yield rose on Friday, rising 2.9% to yield 1.64%, tracking gains in the US counterpart. The 10-year US Treasury yield climbed 1.6% after New York Times reported that President Joe Biden would announce a massive $6 trillion budget for 2022 on Friday. And now let's have a look at these 3 ASX shares for dividend income. Well, investing for a dividend income, also known as dividend investing, focuses on the income generation for the long-term investments in the form of regular cash flows. Although capital appreciation is also a motive, but consistent dividend remains at the forefront for dividend lovers. One main reason investors love dividends is that regular dividends also help to reduce the cost of a purchase. For example, a company's share bought at 10 Australian dollars, which declares a dividend of 0.5 Australian dollars, aka 50 cents, practically reduces the purchase price to $9.50. With that being said, let's have a look at a few consistently dividend-paying companies trading at a decent yield. The first stock is Rural Funds Group, which is a $826 million agricultural real estate investment trust, or REIT. It has a portfolio of farmland across different farm types, including almonds, macadamias, vineyards, cattle, cropping, that is sugar and cotton. Rural Funds is one of the ASX 200 shares that has a stated distribution growth target and wants to increase its distribution by 4% per annum. The income growth by the fund is achieved through productivity improvements, lease indexation, and conversion of assets to higher and better use. It has robust existing earnings and a balance sheet capacity to fund developments whilst continuing to fund growth distributions. Rural Funds has forecast an 11.37 cent per unit distribution in FY22, which translates to a forward dividend yield of 4.8%. Before I share the next ASX shares for dividend income, it is time for another short break. At 𝐊𝐶𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. Hi and welcome back. I'm Holly and you're watching 𝐊𝐚₥ TV live from Sydney. This is the mid-market pulse. Let's have a look at this ASX share for dividend income. Amcor CDI is one of the global leaders engaged in development and production of high-quality packaging for a variety of medical reasons: pharmaceutical, food, beverage, home and personal care and other products. With 230 sites and 47,000 employees, it has its operations spread across 40 countries. The company is currently extracting synergies after going through its merger with Burness in the US. Amcor continues to grow despite the COVID-19 pandemic's impact on the global economy and its respective markets. The growth has also led the company recently to increase its adjusted EPS growth in constant currency terms to a range of 14% to 15%, up from 10 to 14%. Taking the last 12 months of dividends into consideration, Amcor is trading at a dividend yield of 4.16%. And the next ASX share for dividend income is Com Limited. This auto listing company could be an ASX dividend share to consider, not only from a dividends perspective, but also for the capital appreciation. Carsales.com has a strong foothold in the ANZ market and a number of growing operations across the world. The company is also planning to expand into the US market with the acquisition of Trader Interactive. It will provide the company with the exposure to a significant market in the United States across attractive non-automotive verticals. This month, the company had also completed the institutional component of its entitlement offer, raising approximately $428 million, which would be used to acquire Trader Interactive. Based on the current Carsales.com share price of $19.09, the stock is trading at a dividend yield of 2.61%. The CAR share price rose 6 days out of the last 7 trading sessions, depicting a strong momentum. Well, that is all for now. Keep watching 𝐊𝐴 TV as we bring you the latest in the news, trending market updates live from Sydney. Holly Shields signing off.